It's the multi-billion-dollar question for the Australian economy. Is the mining boom over, or has it simply peaked? With the Chinese manufacturing survey falling to a 9-month low, BHP's decision to can Olympic Dam is looking like the smart move. But the picture's far from clear. Iron ore upstart Fortescue today posting a big jump in profits and claiming it's selling everything it can dig up. Neil Woolridge reports.
With a one-page announcement on Wednesday, BHP Billiton has turned sentiment about the mining industry on its ear, declaring that the $30 billion Olympic Dam expansion is on hold.
The commodity price boom is over. Anyone with half a brain knows that.
The China growth, the constraints on supply and the rapid rise in prices, those glory days are ostensibly behind us. But it's not all over. We're not going to gloom and doom.
In Canberra, they're playing the political blame game. However, at a mining industry conference in Perth, the talk was not of a mining bust, but instead the boom moving into a third phase.
There will be corrections along the way, and we're having one now, but I don't believe the boom is over.
The broad picture of emerging markets buying more of what we produce over long periods of time, that secular picture is still there. We've got to recognise there's going to be a higher level of volatility.
Indeed, Andrew Forrest's Fortescue Metals has done what its bigger rivals couldn't, posting a 53% rise in net profit. Earnings before interest and tax grew a more modest 14%, still a solid result in a year of falling iron ore prices as the company continues to expand its operations.
Whilst prices have come off for the bulk commodities, which of course are the things that drive BHP and Rio Tinto's earnings, by historical standards they're still very, very strong. And of course it's all about demand as well.
Whether the mining boom is turning to bust or merely shifting down a gear or two, there will still be implications across all levels of the Australian economy, including the federal and state budgets and among local firms who'd been banking on work from major projects.
I think the whole state and all of these northern cities were just looking for a shot in the arm, for looking for something to get excited about. And I think this sort of had huge flow-on effects as well.
And while it's clear China is slowing, no one is exactly sure by how much, in part because of lingering scepticism about how reliably China's official statistics reflect what's really happening. The latest piece in the puzzle is HSBC's Purchasing Managers Index, which dropped 3% in August to a 9-month low. Whatever the true story is in China, it seems Olympic Dam is unlikely to be the last major project to be put on hold.
So we're going to have to make more tough decisions, invest in fewer projects. We're going to have to defer other things. We're going to have to stage projects.
What we're seeing is a more judicious approach to spending capital. And in the Woodside instance, Pluto 2 simply hasn't been justified by exploration success and finding additional gas to go ahead and expand production volumes.
Still, the great unknown is how much further commodity prices have to fall. To a large extent, that will depend on whether China's slower growth rate becomes the new normal or if the leadership team taking over this year will decide to hit the accelerator.